This content presented today is not directed to any investors or potential investors and does not constitute an offer to sell or a solicitation of an offer to buy any securities. And with that said, it is my honor to introduce today's panel. We have three managers focused on Latin America, starting with Javier Cueto from Imagine Ventures, Lucia
Hi, everyone.
Alva. Hi, Javier. From Salcantay Ventures. And
hello.
Hello. Lastly, Andres Bear.
Hello, everyone.
Okay, yeah, let's start with some intros. Javier, maybe you can sort of share your origin story. What inspired you to become a manager?
Yeah, of course. Well, hi, everyone. I'm Javier Cueto. I'm now in Santiago, in Chile. My history here in the startup and venture capital ecosystem, it's been over 12 years. Started with this since university when this topic of startup and entrepreneurship was just like getting started here in Latin America. So I got really involved into that, first in the research part. I did a master's degree focused a lot in the bias in the decision-making process of entrepreneurs and venture capital to understand more how the psychological perspective of the investment and what actually, why entrepreneurs are like entrepreneurs is because they do have more biases, and that's a good and a bad thing at the same time. And then I got more involved in the university part of the Center of Innovation, and I work a lot in different programs, one especially where we did an immersion in Silicon Valley to give more of a global perspective to the Chilean entrepreneurs. And then I moved to Imagine 8 years ago. First, we started as an incubator and accelerator, and we started to grow and working with corporate as well in different corporate venturing initiatives. We manage a public fund here where we invest in really, really early stage startup, over 120 from idea and VP level. And then the next natural step was coming into the venture capital scene. So that has been a little the evolution on how I came to this ecosystem and into the venture capital field more specifically.
That's a very interesting journey, Javier. Thank you for sharing. Lucia, how about you?
Sure. Thanks, Niels. So Lucia Montalvo, I'm the vice president at Salcantay Ventures. I'm originally from Colombia, but currently based out of New York City. And I have over 11 years of experience in finance, including investment banking, venture capital, and impact investing. I guess I started in the industry more so by accident because I was looking to pivot from investment banking into impact. And I found the team at Salcantay who were building this really cool project for an institutional fund in Peru. And I thought this was a very interesting way to marry, my mission towards having an impact with my background in finance, and essentially got super convinced that technology is a very efficient way to scale impact. So that's why I'm really motivated to be an investor and to be able to help those entrepreneurs that are looking to change the world and solve the region's greatest problems through technology, essentially.
Thank you for sharing, Lucia. Lastly, Andres?
Thanks for the invite, Niels. About 15 years ago, I was in the Central Public Prison in Santiago, Chile. So I'm Chilean, based in Mexico now. I'm a lawyer by trade, rehabilitated like a lot of other VCs I've met out there, and then developed my career mostly in Australia. I was 8 years in Australia working with large mining and energy companies. That's where I connected to the sustainability space, realized that was going to be a big opportunity for Latin America. So after Australia, I did my MBA at Oxford, where there's a strong focus in VC and impact investing. Came back to LATAM, worked with different accelerators and funds, and at the end ended up managing a corporate venture capital fund which was part of ENGIE. It's one of the largest energy companies globally. And we had an allocation for Latin America where we invested in 12 companies from Mexico all the way down to Chile. And that's where I saw the opportunity and the amount of talent that we have in the sustainability space, which inspired, without getting into the details of the thesis, inspired the launch of Savia Ventures, which was started last year.
Thank you so much for sharing. So a lot of you have like a very global background, right? But you're currently gravitating back towards LATAM. I'm assuming like your investor base is like comprised of like both US investors and investors in actually LATAM. When you're talking to US based investors, how do you sell those people on the region? Maybe Andres, you can start.
It's a different pitch. Let's start from there. And we can double click on that afterwards. Pitching to LPs in LATAM and pitching to LPs in Chile, Mexico, Mexico City or Monterrey or the US.
Yeah.
All of them are a different story.
Okay.
But if the difference in LPs in the States, it depends if they're familiar with the region. Some of them are. Some of them having done angel investments or maybe have been LPs in LATAM. So the education piece is a bit different. If they have not, large part of the pitch revolves around the whole LATAM opportunity, which they are not aware of, and addressing straight away some of the common concerns you hear about currency volatility, regulation, country risk, how we are dealing with all of those factors. But it's mainly about the opportunity and how Latin America, in all of its verticals, from climate tech to fintech, future work, and many others, it's an untapped market.
No, thank you so much. Lucia, what's your approach to pitching like people who are not that familiar with the region, on the region?
Yeah, similar to what Andres was mentioning, I think there's a component of educating the potential investor or LP into like what is the region you're operating with, under which constraints the fund will be investing in, but obviously selling the long-term fundamentals that are like have been and are still there. So for instance, Latin America has 660 million consumers that are speaking 2 languages. It's a very young population of individuals that are embracing online services at a very fast pace. Connectivity is growing and very strong. There's a vibrant business community and need for digital solutions. So in general, there are a lot of gaps in both human and physical infrastructures that can be closed by technology. And that married with a very talented entrepreneurial pool of individuals poises the region for success in BC. So I think selling those strong points as well as maybe letting them know that investing in Latin America is a long-term play and that you need to learn how to ride those waves is very, very relevant.
Okay, very interesting. Javier, do you want to add something on this topic?
No, I think I will add that at the end, like what we've seen is that they have this really general idea of Latin America, and you really need to like make the effort to educate them and show them like what actually are our strengths, and at the same time what are the weaknesses. And a lot of them, and I think when they're based on the US, is such a competitive landscape, is such a mature ecosystem, that when you start also showing, okay, Latin America is really a couple of years behind, but at the same time, that's an opportunity. Like when you see, for example, like an arbitrage in valuation, when you compare like a seed startup going to Series A in LATAM versus a seed in the US going to Series A, you can have here like 4 times a better markup because of you compare of the amount of valuation. So
Right.
when you start showing them, okay, at the end, of course, we are like less mature. Of course, the economy is not as developed, but at the same time, those represents opportunities. And actually, you can get here also and start investing and getting to know here Latin America with better conditions. You don't have to put that much capital compared to the US. So at the end, when you start like trying to show them that also it's a good opportunity to test, a good opportunity to get to know the region and the potential that it has, I think that you can convince them better. But it's not easy. You need, I mean, it's a lot
Right.
of time to invest also and get them to know and understand what LATAM is, what LATAM represents. Like for a lot of people, they think LATAM, Mexico, and Brazil, and that's all. And there is a lot of more
Right.
opportunities there, and that's part also of what you have to tell them.
Yeah, that's very interesting, and I also don't want to like LATAM. It's one thing, like as many of you have already pointed out, there's even regional differences within Mexico, within Brazil sometimes, and yeah, it's also interesting how you deal with that, right? So there was, Lucia, you mentioned that LATAM is like a long-term play, right? And I think in recent years, there was like a lot of momentum for the region. It was one of the fastest growing sectors in venture capital, but past year, I think 2023 was a down year for funding in a lot of regions, and LATAM was maybe hit harder than some other global regions. What are your expectations for like 2024? We're seeing public markets pick up. Do you think that will transfer over to investment in LATAM as well?
Yeah, I think the last couple of years have been interesting to say the least. I think companies have had to adjust to a new reality. They've had to reduce their workforce, close operations, and focus on those more profitable business lines. Some even to justify very high valuations that they raised in 2021. But now with the given that capital, like the cost of capital is not at near zero as it was, and the markets are very tight, I think we're continuing to see a wave of follow-on and bridge rounds, and seeing this like bifurcation of companies between those that thrived in this new market and those that like thrived just because they had access to capital, that they were able to raise capital. And I think those that were able to maybe change and use the past months more wisely, and learn to operate with less capital are coming out more like stronger this year. And we're seeing increasingly investor interest catch up. After all, there's still like 2 billion of fresh powder that was raised last year. I think PitchBook confirmed that there's an overall of like 3.7 billion of capital available to be deployed in the region, but probably like in good companies and at fair valuations. And I see growing opportunities in consolidation of companies that are that are being able to acquire maybe those that are not surviving. There's a lot of growing interest in climate and generative AI. Those are topics that probably you'll be discussing later on.
Okay, that's very interesting. I want to briefly double click on one of the things you said. So a lot of companies raised that like sometimes not so justifiable valuations in 2021, and 2023 is maybe if 24 is maybe the year where we see like some reckoning, but the strongest companies will survive and really thrive. Is that does that matches your experience, Andres or Javier?
I can, yeah, definitely. It's there is powder out there, but as Lucia mentioned, it's been reduced. So it is definitely more competitive than a couple of years ago. So we have seen that only the best ones are getting funded. And what we've seen as well is companies from LATAM that are highly mobile and are raising rounds outside of Latin America. So just as an example, one of my portfolio companies, Strong by Form, most of their seed round, those approx 5 mil, was with European investors, and they set up shop in Spain. We have a similar case in with Splight, which is AI for energy efficiency. A lot of them are also seeking investors outside of Latin America. So capital has become scarce, and companies have to remain mobile and adaptable under those conditions.
Javier?
Yeah, no, I agree, and I think 2023 or from late 2022, it's where like we start seeing this decline, and of course it changed completely the fundraising strategies from the startup, from the VCs, and I think at the end, what the good part of 2023 is at the end made realize, like for the entrepreneurs, was critical to create not just a growing startup, but also with sustainability. It has to be like a sustainable model to growth and not growth at any cost. And I think it was pretty hard 2023. I totally agree, and I think that also made like the good startups to be still competitive, but completely changing their strategies, how they will make like the use of funds also became more relevant. And what we think it's probably 2024, it's going to be better, but not much better. Right. So at the end, I think 2023 we hit bottom rock, but I think now it's gonna be better, but it's not going to be like a huge difference. We are not getting back to 2021 levels, and not even close. So it's important also that at the end today, I will think VCs will be more willing to invest more, LPs will be coming back too, but it's going to take time. So I think we're going to start like a transition period probably this year.
Okay, so much like how a number of companies that started in 2021, would it also be fair to say that there's a number of fund managers who started out in 2021 who were having easy access to capital that are struggling more right now? Do you think it will be a revealing year for fund managers in the region as well?
So well, we are in my experience, yeah, we live that we started at the beginning of 2022, so we saw like that completely changing so we were starting from a really like high boom and then leave all the decline period as a manager. So we know the challenges, and of course we all had to change our strategy, not just the startups, the VCs as well. And what I think is that probably 2024, it's going to be, I would say more, I don't know if easier, but it's going to be it will be better for new managers, especially in Latin America. But I think you have to have a really credible value proposition. And at the end, you need to try to do something different, because if you want to do what everyone has done, probably it's not going to be much easier, and it's going to be tough. So I think you need to really find that unique value proposition that's going to highlight you and actually is going to show why you are indicated to do this, and also why Latin America is the region to actually enhance that opportunity. I think that today the managers that are thinking to launch a fund or that are starting to launch a fund, they need to really have different scenarios in their strategy. Because as we said before, 2024, I think it's going to be better, but it's not going to be of a huge difference compared to what was happening before. So I think at the end, the ones that are going to thrive are the ones that have a good value proposition, that actually are getting a value from being here in Latam, but as well that they are really realistic in the timing, and really also realistic of how much time and effort it will take to create a fund. It's not going to be as fast or easier as it was in 2020 and 2021.
Okay, no, that's very interesting. Lucia, do you have any like key advice for managers starting out today, knowing what you know?
I mean, I guess like building on what Javier was saying, it's never really easy to raise a fund, even despite the boom of like that the VC industry and entrepreneurs went through in 2020 and 2021. It was still like we were still in the middle of a pandemic. So
Right.
Salcantay, we started fundraising in January 2020. So we had like everything against us. But still, in a way, the pandemic also allowed us to reiterate our investment thesis that technology was helping to bridge gaps and
Right.
solve problems. So I think it's never easy. It always takes longer than expected. If anyone tells you that it takes a year and a half to raise a fund, that's probably not true, or at least not for an emerging manager in Latin America. But I guess you need to, as Javier was saying, find a way to differentiate yourself, build out a strong thesis, and how that thesis aligns with your own, like the partners and the team's experience, how you're able to leverage your expertise and add value to those portfolio companies that you're going to bring into your fund. And do a very good job in reaching out to as many potential investors as possible, leave no stone unturned, but
Right.
obviously not just like in a disorganized fashion. You need to go look for those investors that are interested in your region, that are interested in your thesis, and try to help them build out the case of why investing in LATAM or why investing in your region
Right.
makes sense for them.
Thank you. Andres, do you have anything to add on that topic? What's some advice you would give to managers starting out today?
Yeah, well, we started last year, so I wasn't part of the golden age of
Right.
2020. Now, if you read blogs like Elizabeth Jeans from Hustle Fund, that was 2018, the hassle she went through was the same as you have to go through now. So my first point would be not to worry about market conditions that much. So the hustle will need to be done regardless. And much in line with what Javier said, if conditions are tougher, then you need to be more competitive. Your value prop needs to be razor sharp. You need to be creative as to how you're gonna do the fundraising. And ultimately, I think you need to be dilutional. Be dilutional. That's my advice, Niels.
Yeah.
So you have to have dilutional belief in your thesis and in the value you're adding. That's gonna be behind all the grind that's needed to raise a fund.
That's a very honest answer, and I do appreciate that. And like listening to what everyone is saying is like, yeah, I already knew this, but no matter what the region, it's a very hard thing to do, starting a fund. And I'm wondering on like a more personal level, what are things you do to keep yourself in the fight to really persevere and
I can start. Oh yeah, I think it's at the end of raising the whole experience of raising a fund. It's a roller coaster in different perspective, like from your business or to day to day, your psychological point of view as well, because you go to really hypes when you close deal, when you close investors, and then you go really down when you get a lot of no's, and it's a constant process that's changing all the time. So I think at the end, for this part of the process, I think you need to one understand that this is a long term, as it's not easy. I mean, at the end, and I agree with Andres, it's like probably now it's harder, but it didn't mean that before was easy. It was just like now it's harder than probably before. But this is not a process that that's going to go like really fast. And I think at the end, it's really valuable to rely on your network and see actually also how you can create value to that network in order to gain the value back. And I think also having a good support system and finding good partners, and I think that's critical, like, because at the end, this is a really tough journey, and you need to have good partners there in order to support each other. And I think one of the things that I'm learning when it's the lacking of good partner and support, it even makes it more complicated. So I think you need to be with people that are really aligned to what you want to do with your dreams. And then I agree also with Andres. You need to be a little crazy to do this as well. And I think it's really good for them to, like, of course, you also read a lot of the hype of the value that like the VC has, like all the impact that you have to create. But at the same time, you really need to be aware of all the, I will not say negative part, but of the tough part of the process as well. So you know what are you getting into, what it will require from you, in not only in your business perspective or network perspective, also in your personal situation. And if you're willing to do that, I think it will make not easier, but it's going to be, at the end, you're going to enjoy, or you're going to be able to survive this process of creating a firm and a fund.
No, thank you. That was a really insightful answer. Lucia, what are some of the things you do to keep the finish line in mind and persevere?
Yeah, I think top of mind is like for me, it's super energizing to speak with entrepreneurs, to meet entrepreneurs, and like really let myself be like learn from those individuals that are seeking to change the world. It's super inspiring, and just doing that allows me to keep the faith when things become hard. So I think always going back to what is the impact that we're eventually looking to have, and who we're helping helps. Also building like a network of people that you can lean into and you can collaborate. Ideally, if you have mentors who you can reach out to, who maybe have gone through this journey before, and you can like they can provide insights or learnings, are very important. I also, personally find certain affinity groups to be very helpful. Like, for instance, We Invest, the community of women investors, in which we can obviously share experiences of what we're doing, ask for advice, ask for resources, and provide our help to whenever we can. That is really fulfilling to me. And in general, as with anything, I think finding ways to unwind, whatever that means for you, whether it is exercising or meditating or taking a walk in the park, I don't know, anything that helps you keep your sanity and focus.
Thank you. So you can be delusional, but yeah, keep it in check enough to harness that delusional energy for your fundraising. Thank you all for your great answers here. We are starting to get some questions from the attendees now, and I will start getting into those. Yeah, everyone feel free to ask your questions in the Q&A and upvote ones that you would like to see answered. So we have a question from Mark Albert Santos. He's asking, in the last quarter, last year in LATAM, who gets close to a funding deal more from VC, early stage or Series A startups? Anyone have any thoughts here?
Well, in general, last year it moved way more to pre-seed and seed the investment. When you see the data, like 2023, more than I think 83% of the investment were in early stage in LATAM. So one of the impacts of this, as Lucia explained before, that we have less liquidity, like money wasn't free anymore. At the end, what started to happen is like from big deals, starting to move to actually more early stage. So when you see that today the most rounds from what I understand, the question is from the startup perspective. Yeah, today there is more traction in pre-seed and seed than in Series A. I would say Series A is not like that much affected compared with Series B and beyond. That's like really was a huge. It's really hard, the situation in Latam. But yeah, it has moved a lot today it's much easier raising a pre-seed and seed than a Series A or beyond.
Thank you.
No, to agree on for Series A, it gets more competitive because you will have to deal with mainly funds or institutions that have more assets under management. We can say family offices mainly. For pre-seed and seed, you do have angels, and that's a pool of investors that's extremely vast. You can have angels that have never invested before. Some do little checks here and there, but I think the pool of available investors at that early stage, it's much larger, so it makes it less competitive.
Okay, that's interesting. I don't know, Lucia, if you want to add something there, or
Just piggybacking on what Andres was saying, the pool of investors is larger at the earlier stage, not just because you have the angels, but also those smaller local funds, which have increased in relevance in the current juncture, where like the larger international investors that were funding like the larger mega rounds are not necessarily looking into Latin America with a lot of interest. So it like our funds are taking even more relevance in this juncture.
very interesting. So angels are like an untapped source for me. Yeah. What are some strategies to get angel LPs in particular?
From what I experienced, I think it's when you see a lot here, they need to be really related to the industry what the startup is focused.
Right.
When you see most of the angels, it's because, for example, they first started as clients and then they saw the potential in the startup. And then you see, for example, now that one that we are analyzing right now, they are working with an insurance company. And then when the director of the company saw they started, then they invested as an angels. Because they start to understand better, okay, what is the potential of it? And I think it's also become of smart money. I would say in a different with the US, where a lot of angel just invest in a PDF or in a PowerPoint. Here they are more in the pre-seed stage when you compare it more better, so they want to see something more developed. So it's a little more like not as early stage as the US. But at the end, the best strategy is to look for people that really understand at the end the industry or the problem that you are dealing with. And usually you get them really fast, as Andres mentioned before.
Okay, that's insightful. Thank you, Javier. Andres, I see you still, you unmuted yourself. Do you want to add something here?
No, it was on the same lines. If you are looking for angels, look for your same industry. If it's an angel, that ideally you can check it on Crunchbase. Well, if you do have access to PitchBook, that's even better. But I have invested already in similar startups. Most angels tend to invest in startups in an industry or they know about or they wanted to learn more about. But that's a very good starting point to go to angels that are in your industry. And at the early stage, a lot of the startups don't have much traction to show. So the storytelling, it's gonna play a crucial role and getting that angel inspired, because you can't really show much traction on sales or users or other metrics.
Okay. Importance of storytelling. That's very interesting. Gonna skip ahead to a question from Dimitri. He's asking, in terms of deal sourcing, what sets emerging managers apart from more traditional VCs? Do you take more risks or go into less developed industries, or is there anything else?
I would say outside that we are better emerging managers. Let's start from there. If we're comparing it to more traditional VCs in developed markets, yes, definitely emerging managers are willing to take more risks, are willing to go and do the work on finding those hidden gems. And I've seen that they are substantially more hands-on in the growth of those early stage companies, because they do need it more. A company that's already at Series A or coming to a Series B may need support, but not as much as an early stage startup. So yeah, those are some of the differences I've seen, and that a lot of the emerging managers are on the ground, have boots on the ground. They speak on a regular basis on the happy hours and events with the whole ecosystem.
Thank you, Andres. So Javier or Lucia, what are some other differentiators for emerging managers that you would find notable?
Yeah, I think I agree with Andres that I will say that that's also part of the maturity of the ecosystem. The more traditional VCs, because they have probably they're in fund 3, fund 4, they're moving more into Series A or to that stage. So at the end, for this more early stage, now the main players are emerging managers. And I think those also are stages where you need more of an acting role as a VC, not just sitting in a board or asking for a report each month. It's like, no, you need to work with the startup. You need to actually be there, like through a WhatsApp call every time. So I think one of the value add that they see is that you are really more accessible. And you're really like working there. Usually also emerging managers, well, it depends of course on your thesis, but usually tend to be not these funds that they have like 40 or 50 startups in portfolio. So where basically you are just like spreading and see how it goes. They tend to have more like regular size 15 to 20 startups. So you still have more time to go deeper into your portfolio. And because you know also that as an emerging manager, if your first fund and second fund portfolio, they do well and you have like good investments, then your opportunity as an emerging manager to grow and get or be more established manager, your probability grows. So at the end you have, I will say, the incentives really align to work together and make things happen. And the emerging managers, usually the new emerging managers, those are coming from the ecosystem. They were part of accelerators, they were part of incubator, they were entrepreneurs, they were angel investors. So they are more involved. It's not like coming from the traditional financial world to VC, it's coming from the same ecosystem into it. And I think that's also something that the startups like a lot. And I think probably that's something also that differentiates the emerging managers from the more traditional or established VCs.
Right, there's a whole life cycle of people going through different roles, and that's interesting. Lucia?
I think those were very complete answers.
Thank you. Let's see. So Kata is asking, I'm gonna paraphrase it a little bit. There's a ton of traditional financial instruments that exist in the global market today. What are like the main advantages for an investor to invest in VC?
Higher returns. Let's start from there. We're talking portfolio diversification from a asset manager perspective, I'm assuming. So we're including all public equities, every possible investment, and we were building a portfolio. You will have higher returns on that VC allocation. Higher risk as well, yes, but it's worth allocating a portion of that portfolio. That's one. Secondly, if you are interested in an industry, say you're working in manufacturing and you want to learn more about what's coming up in the tech in manufacturing.
Right.
Those type of investments will also give you that knowledge of what are the cutting edge technologies in the sector you're working in. And plus there's a whole, I could go on, but I'll keep it to those two main advantages.
That's interesting. I hadn't really considered that. Like, it could help people in their later careers as well, right? If they stay really up to date on what's cutting edge and anticipate trends better. Thank you. Anyone else care to weigh in on this?
An additional topic, and considering the shift in who the owners of capital are now, like the new generations of wealth that are increasingly more conscious about like what's going on with the planet and like making decisions as consumers or of where they put their money in. I think from that perspective, there's also an interesting angle for VC as an asset class to showcase the potential, not just for financial returns and for, you know, very strong financial returns as Andres mentioned, but also a potential for impact and how technology can help increasingly scale that impact and access a huge population that is very eager to be served, that is being excluded from the traditional markets. So I think from that perspective, there's also a big opportunity.
Yeah, thank you. Yeah, maybe this ties into a question from the audience, from Jose. He's asking, what are the main challenges for VCs when investing in impact-focused projects in LATAM?
I think one. Go ahead.
Dale, Lucia, dale. Go for it.
I was gonna say that there is a lack of knowledge of what impact investing is, and a lot of people confuse it with philanthropy. But there is a whole spectrum, right? From traditional philanthropy where you're not expecting any returns, to like market rate investing in the public markets and anything in between, where Salcantay is in that middle, where we're looking for both financial returns and impact. And so I believe that a lot of investors or people in the field don't really know that it is possible to find those companies where the impact is in lockstep with the business model of the company. So let's say an education technology startup that is educating individuals and improving their odds of obtaining a job. As the company grows and more students grow through its program and more students gain access to high quality jobs and they increase their level of income, not just the company grows and does better financially, but also the impact is growing. So I think there needs to be an understanding that while there is room for different types of instruments and for philanthropy, not all impact is concessionary.
Right.
If the question came from an entrepreneur as in advice for entrepreneurs that are in impact, my advice, if we're talking LATAM, is go business first, impact later. Even if your business is impact first. Our fund, we measure impact. All of our companies have impact. We have thorough metrics. We do not classify ourselves as an impact fund because of the same reasons Lucia has mentioned. So you as an entrepreneur, you don't want to go on an education crusade. You want to convince investors, and it has to be in the next few months. So my advice is always business first. Show me that this is a sustainable business model that will generate returns, and then we can go on the impact side. I know some people would totally be against this, but I think in the region, if you want to be effective, it's what they call social enterprises. This is enterprise first, social second.
Okay, that's very interesting. I think that's a valid take. Javier?
Yeah, no, I agree with. I think both make really good points. In our case, we are aligned to what Andres said. For example, in our case, our fund, all of our startups do have an impact strategy as well, but we don't define ourselves as an impact fund because personally, I always believe that I would say it's really hard to find startup that don't make an impact. The thing is how actually you measure and how you actually show that impact. But what we are doing in this case, and I think to even go broader, is that we say, okay, we are looking for startups that also can create this impact or also have diversity. And I think also that the word of diversity is a huge challenge in Latam. I think impact, I think, gets more attention, but when you see diversity, in not only gender diversity, that's already a challenge. When you have, for example, people from different perspective, ethnics, sexual diversity, at the end, there is a huge opportunity to connect all of that. But at the end, if you're doing just for philanthropy, it's not for VCs. You need to have the business perspective as a core and show that because you do that, this increasingly produce impact, or you are actually focusing on gaps on diversity. At the end, it needs to be connected because this is not philanthropy. So I think, and I agree with Andres, at the end, you need to, if you don't show that this is a feasible business, okay, good for the impact, but at the end, we cannot invest in you. So you need to have both perspective as well.
If you're not able to raise money, you're not going to make an impact as well.
And one minor last comment on that topic, I think tying back to the earlier mention to storytelling, I think you also need to be aware of who your counterparty is, who you're speaking to, and tailor your pitch, whether you're a fund raising from LPs or you're an entrepreneur looking to raise capital from VCs. You need to know like what is more compelling to them. If you're speaking to a traditional investor that only like cares about financial returns, focus on the business and that part. If you're talking maybe to a DFI or like a development finance investor, maybe you can tie in the impact component. It depends on who you're targeting.
What are some things you do to tailor your pitch? Because that's a very interesting topic to explore as well. Like, do you do research on the LP or how do you go about that?
Definitely. I think you should always know who you're going to be reaching out to. When you're like, when we were fundraising, we obviously try to understand who like the investor was, what their like investment thesis is, how that ties into what we're doing, and try to sell those points that better like resonate to them to make it more interesting. I think it helps when you're doing your research, not just to limit yourself to what's maybe publicly available, but try to get some insight from your network, someone who knows that investor and knows like the type of things that they like. Obviously, I'm not saying you're supposed to like misrepresent and say things that are not the case. You should always tell the truth and sell your business, whether you're a founder, the company, and what is the potential for that business to be successful. But you can always tie in some narrative that helps you build a better case towards that particular person or firm you're targeting.
Thank you, Lucia. Anyone else want to add something here or?
Yeah, probably I agree, and I
Okay.
yes, briefly, I will say that at the end, what you need to do is kind of, and I agree a lot, like trying to get this more insight regarding your potential LP, and not just their, like we'll say, business background, like the interest on that, but at the end, you need to be. What we have done mainly as the end is like we don't change the deck regarding like that. It's more what you are telling and the story you're telling. So at the end, you are changing a little bit more your storytelling and highlighting certain points that you know that will resonate more. But at the end, the offer is the same for all the LPs. So at the end, you don't make like, okay, huge changes in your deck based on who you're pitching. It's at the end, which are the points that you're going to highlight and that will make more sense for that LP. Of course, if you're pitching on a family office or an angel, you can have probably a different version of your deck. But if you're pitching to different kind of angels, investor, or high net worth individuals, at the end you go with the same offer, but you will actually make points. For example, if you're pitching to a person that works in a big tech company and you already have investors from a big tech company, well, you can relate to them, let them know that you already have people that are part of their network coming here into the fund. And of course, at the end, you have to create confidence. If you create confidence, then it's going to get easier to move forward.
Very interesting.
Just to add to that, yeah, of course, the prior research, we always do it. You being realistic, you won't have time to research all of your LPs. And if you're having a lot of meetings per day, you'll have to be quick research. What helps, having archetypes. VC Lab is very big on this, and they have great materials on building archetypes that can be applied to startups and to funds. So you know which archetype suits better your thesis and the type of archetype you will be pitching. Agree with what Javier said. If it's a very different investor, say a corporate, yeah, you may have to change the narrative a lot and may change the deck. But if we're speaking with, say, angels, it's the same pitch, and you try to relate their backstory with some of the components of your storytelling, and ultimately try to get to that driver from the investor, which is an art, because a lot of these meetings are half an hour and we get the full range. Some investors want to learn more about technology. Some investors want this as an opportunity to get closer to their daughter, which they don't speak with much, and the daughter loves technology. So this could be a chance to do that. There's a whole range of drivers, and getting to that driver can be extremely valuable to close.
Interesting. I want to be mindful of everyone's time. We have about 4 minutes left. So I'll quickly go through some of the questions in the chat. Dimitri is asking, what industries are great to invest in LATAM for early VC in the coming years? Is fintech already too late? Energy, climate, any thoughts?
I guess all of us will have different theories. To go with climate, of course. Climate is going to be the biggest business in the next 10 to 20 years. Companies are making public commitments to getting to net zero by as close as 2030. Some of them don't even have a roadmap how to get there. So there will be a peaking demand for climate technologies in the very general sense. I'm going from food tech to energy, transport, building materials, list goes on. And the region is facing already dire and urgent problems in the climate space, such as water. So Latin America is running dry at the moment. These are challenges which will present huge market opportunities.
Thank you, Andres.
Yeah, I just to build, I totally agree. Actually, we are just closing an investment in a water startup. And I think today opportunities in Latin America, in some things such as we are behind more developed regions. And I think at the end, the good thing about the pandemic is that it helped to change the mindset of a lot of decision makers. So today we see a lot of interest in all the things regarding the future of work, and not just from the HR perspective, in the broader sense, like today, how industries are going to be changing the way they do things. So for us, we are looking a lot for regarding sustainability. It's such a huge, including climate or green tech, or today there is a lot of also the transition from companies to measure these things. So they're including a lot of software there. Of course, artificial intelligence will be, I will say, the main driver today in digital transformation. So digital transformation is such a broad topic, but today, of course, we have a lot of focus in AI. And just to tackle the fintech question, more than too late, I would say today you need to be more niche in fintech, because okay, if you are doing another lending company and there's like hundreds of them already, yeah, probably it's going to be harder to invest on that, on find investors. And I think fintech, it is opportunity today, still in the infrastructure part of fintech. There is a lot of things to be done. So I think fintech is still a big opportunity, but you need to be really specific and do a lot of research and competitive landscape to understand what is the niche where you still can grow.
Thank you so much. Lucia, where do you see opportunities?
Yeah, I agree with climate being a huge opportunity, whether and also an area in which Latin America has an edge. Obviously, Andres and Savia are expert on this topic, but we are one of the most biodiverse regions in the world, and also one of the regions with better potential for carbon capture, and that's like those carbon markets are scalable globally. So that's an opportunity for startups from LATAM to grow. Fintech, I agree with Javier. It's definitely still huge, and that's the case why more than, I think, 50% of VC investment is still going into fintech. And the truth is that banks are still highly profitable. They're not tending to all the client, like all the individuals that want to be served. They have one of the most profitable results in banks across the industry, the world, and on the Latin American economy is still largely cash-based. So there are a lot of opportunities there. Particularly interesting to me, I think infrastructure plays, open finance plays, and embedded lending, embedded fintech provide a lot of room for growth. And as many say, probably every company will be a fintech company. So I don't think fintech will be gone anytime soon.
Okay, not too late. No, thank you all for your wonderful answers. This was a great discussion. Unfortunately, we've hit the top of the hour, and I just want to thank all of you for participating. We do these types of events every few months. I think we try to feature managers for the region. So maybe we'll see you on the next edition. Thank you for participating, and thank you everyone for attending. Bye.
Thank you so much for having us here.
Thanks, everyone.
Have a good one.
Yeah.